Making investments is something that's extremely unique. It's not something that most people have experience with, and it's not something that a lot of people are comfortable with. But that's also what makes it so exciting. The only thing is, how do you get to the point where you feel comfortable making an investment, specifically in the stock market? Well, there's a few different ways you can go about that, but I want to share with you my experience on how I began investing at 19 years old, where I'm at now at 24, and kind of how I got here, some of the things I do different, and some of the things that I would highly recommend you do, because I think this advice is going to be a little bit different than what you usually see online or in books, because I've done it. I didn't have any help. It was really just me on my own trying to learn about this. And, there were some mistakes made along the way, but there was a lot of really positive stuff. And I just want to give you my advice. So take it with a grain of salt. Of course, everything should be catered to your own perspective, your own way, your own feelings. So I've pretty much broken this down into 3 main components on how you're going to feel more comfortable making some of these decisions and really going about investing as a whole. Let's start at the beginning. In my case, I was 18 when I decided that I want to invest. I want to learn about it. I don't even know exactly where to start, but I've heard a lot about the stock market and that kind of being one of the main ways you can invest your money and grow it long term. So that's where I knew I wanted to start. I knew that investing in real estate takes a little bit more money. Now, one of the things that I would give myself credit for, and what I would highly recommend to anybody watching this video, is to expose yourself to as many different bits of opinions and advice and media categories that you can. Watch some news clips, read some articles, read some public, forum threads like Reddit, even Twitter, things like that. Start just taking bits and pieces from everywhere. I know that might sound daunting, and I know that almost might sound like a bad idea because there's a lot of bad advice on there, but that's actually the point. You're going to be able to start to filter out the good from the bad. When you start seeing a bunch of opinions and a bunch of stories and a bunch of personal experiences with things, you start to understand what's a good move and what's a bad move. You need to start understanding that not everything is so black and white. That's one of the most important things. So I'd highly recommend one of the best places for this to kind of get all in one is Reddit. Joining different subreddits leads to so much value because you have a bunch of different hubs, right? You have an investment hub, you have personal finance subreddits, you have Wall Street bets, you have the stock subreddit, you have all sorts of things, really like an unlimited amount of specific subreddits dedicated to any category. So that is already your first step into finding a ton of information. Now, what goes on these subreddits though? Let's go ahead and take stocks, for example, a very wide-ranging subreddit with tons of different bits of content. So on this subreddit, you might see articles being posted from various news sources. These articles might also have little clips, little videos, whether it's from a news broadcast on TV or just specifically made for their website online. You're going to start to read some different things from more official places, more official sources, and you're going to start to see some commentary within that through different bits of videos and things like that. So this is already 2 different forms of media where you're starting to realize how people are talking about things, what they're saying, some of the words you're going to start to pick up on, right? Because you don't need to read a book, How to Invest for Dummies, to start learning some of these terms. Now, even better is that these are places where other people are going to leave comments. They're going to leave their experiences, they're going to leave their mistakes, they're going to leave their positives, all sorts of things and opinions are going to be said in a comment section like this. You might see a guy that posts something like, wow, I can't believe I sold AMD when it crashed and I wish I would have held on to it, right? So now you're seeing someone's regret for bailing ship when they had a plan and they didn't stick to it because they sold after the stock crashed, so on. So now you're thinking, wait, did it crash? You start to look at the chart. Okay, let me go to AMG's chart, see what's going on, right? Oh, 6 months ago, they were down 50% from where they are today. So not every time a stock crashes means that it's just going to stay there forever. So sometimes having some patience pays off. And as this guy said here, he wished he would have done so. Okay, that's great news. Now I'm starting to learn to be comfortable with the fact that stocks will go up and down. Sometimes that's something that happens. I don't need to freak out and lose my mind. Okay, and this process might take you a number of weeks, a number of months, just to start learning the different terms in this world. It's a new world. There's new words, there's new meanings, there's new things that you didn't know. I do want to thank the sponsor of today's video, which is Dossier. Dossier reproduces classic high-end luxury scents at a fraction of the price, keeping the exact same high quality by cutting out all the expenses and the brand tax. All scents are $59 or less, while designer scents range from $50 up to $280 in retail. Woody Tobacco is my newest addition, and it's inspired by Replica Jazz Club, which usually costs $135. The scent is described as a cigar dipped in honey. There are free exchanges and returns forever. Dossier has a welcome offer with up to 20% off the website. However, you can get up to 30% off your first order by using the discount link in the description of my video. Dossier has a new payment method that lets you earn store credit. Select cash at the last step of the checkout and you can earn yourself a $10 bonus credit and even get rewarded with 10% store credit on every order after that. So, from here, you get to the point where, well, that's great. I've got some knowledge. I have some different ideas of what's worked and what doesn't work and what may be the best path forward, but how do I actually act on that? It still doesn't feel great. Am I really going to throw $500 that I've worked hard for into a share of something like VOO? And VOO might be like $440 a share, $390 a share. You know, am I going to throw my money into that? Is that really a good idea? You know, let me think. I need to redefine my timeline. I need to give myself 5 years minimum so that I'm not panicking when something goes bad. It might start making money right away, essentially. It might start blasting up in price, and that would be great. But if it starts going down, you know, I've learned things. I've learned that that's not the end. Sometimes you just need to be patient. You need to wait for things to settle, and that could actually be a buying opportunity as well. If it goes down, I've been reading things like dollar cost average. That's a term that's come up. What is dollar cost average? Yeah, let me look it up again. Oh, that means that if you put money in on a consistent basis, you're basically evening out your playing field. So if you buy a share at $400 and it crashes down to $350, well, now if you've bought another share at $350, your average is $375. Whatever it is, you're sticking to a plan and you start to dip your toes into the water. And that is the scariest feeling, but also the best feeling. So let's say your plan is just to buy one share of VOO, regardless of the price, once a month. That is exactly what you're gonna do. You're gonna purchase your first share and you're just gonna see how it feels. You don't have to put all of your money in. You know that you can take it back out tomorrow if you really feel so strongly about it, but that's the thing. You have to try it. You have to start small and you have to let yourself become more comfortable with the feeling of putting your money somewhere else that you haven't before, because how are all these people making money? They're playing this game and they're playing it long term. So you kind of have to join the crowd if you want to get to where you want to be. So I hope you guys did enjoy this video. I hope a little bit of my experience was able to translate into this video to help you on your investment journey. It's about taking it slow. It's about having the ability to learn about patience. There's really no better way to go about it. You can put $10,000 in right away, but you're not gonna know why you did that. You're not gonna feel comfortable with your emotions when something happens. You just need to take it slow. It's as simple as that. So thank you for watching this video, guys. I do appreciate it. Subscribe to this channel to see more stock, financial, and tech news, and comment down below. What did you think? When did you start investing? Are you gonna start investing, or where are you at in the process of beginning to invest? Thanks for watching, guys. I'll see you later.